Okay, so the webinar is being recorded. Oh, I need to move all this. Okay. So this is IBM chart. If you're a swing member, then you know that we traded IBM, and then I will explain the logic, why we traded IBM puts. So IBM gapped down on this big volume. You see this volume, and it gapped down below 200-day moving average. So gap down and gap up trades are my favorite trade. So we have to know that if the stock is gapping down, will it reverse? If it reverses, then we go buy calls. If it gaps down and we know that, okay, the chances are high that it will continue going down, or if I am wrong, then where I am wrong. So in case of IBM, if you look at it, boom, went down on a big volume, and then it stayed below 200-day moving average. So 200-day moving average, it stayed below, and it failed. It tried to rise, it failed. So we bought the put here. So we know that our stop is on above. Anytime if it crosses above 200-day moving average furiously, then we will be out. Sometimes my mouse disappears. So here's my mouse. So the stop was, again it disappeared. The stop was 164. So if you see this, IBM never went above 200-day moving average. It tried, it failed. Then third day it came down on this big red candle. Then went on a sideway, kept on going down on a sideway, and it never. So it kept dragging down. So it's continuously trend down. Later we raised the stop to 162.50 and above. Based on this, we said, okay, if it goes above 162.50, then we need to be aware of. The next day, after these 1 week or 10 days of downtrend, then there was a news that Warren Buffett sold his 33% stake, and let me push it. Okay, so it gapped down again. So this is the second gap down. So now when the stock is, another thing, when the stock is gapping down or gapping up during pre-market hour, so we have to watch the pre-market level. We need to be aware of pre-market or after market hours level. So sometimes the stocks tops out if it gaps up during pre-market or after market, or bottom during pre-market or after market. So we were in a position that day. I had an errand, but I didn't go. So I stayed and I was watching IBM during pre-market hour. So it went 153. It was staying at 153. Then it went down to 152.50 during pre-market. And then, so we knew that 152.50 is the low during pre-market. And so I sent an alert saying we need to watch this level, 152.50. It must go down below 152.50. And if it goes above 153, because that's the level it was staying during pre-market, we need to sell our puts and lock our gain. So as soon as the market opened, it started moving up above 153, fast. So I sent the alert saying we need to sell, and I sold my puts. So it went to 155, close to 155, and then it just closed it near 154. So that was it. IBM now can come down to 150 and then go on a sideways level, and probably some news will come, and then it will start rising. So for now, IBM is over. So watching the pre-market level was important, knowing where was the low. So that was the key. So, and even if you're not watching, if you had bought puts here, and you have to sell here, because anything can come. Any news comes up, then somebody else says, no, we want to buy IBM, then it will come and fill the gap. So it's not good to hold on a gap down. Next is AOI. AOI this is the day we bought the calls. So I saw this move. I never traded AOI before, but I saw this move. So I said, okay, I need to buy calls. And there was a volume in, I think, 50 strike on June. So if you see, this is the support and this is the resistance, and it was bouncing above. So it's a good probability trade. If it breaks this level, we'll be out. If it goes above, who knows, it can go all the way to this line. So the probability was high, it's gonna go up, and it was moving. So we bought the call, and see, this is what happened. Continuously from here, it went, same day it went here, then went and hit 65 target. We got out early because I didn't know about AOI, what it's doing, why it was moving and what it does, etc. So I had no idea, but I knew that there was buyers were there and there was a volume in option, and where it can go and where we can be wrong. So we could have been wrong here, and we knew that where it can go. So if we know two things, where we can be wrong and where it can go, and what is the probability of the stock going in that direction, that's the thing we need. The next is Win. So Win was gapped up and then it made a top at 127.50, and it was going on the sideways move. So this is the day when I sent the alert. I said we need to keep an eye on Win. We need to buy puts. So we didn't buy puts on this day, but we did buy on this day. And this was the line. So I show you the line. How do I need to move this. So this was 200. This is the line. So I drew the line from here all the way, connecting the tops, and 120 was the line, right? So I did send alert. I said we need to watch the break of 120. It did touch 120 and bounce a little bit up on that day. So this chart was taken a little earlier. Then look at what happened. So I'm explaining the probability of the trade. So it looks like it's topped out, it's coming down, and where it can come down. It can come down all the way here, 117.50, 118 to fill this gap, right? So this is the logic. Now see what happens. Next candle, next slide. So next day it came down, and it hit, I think, 118, 119. So this is when we got out, because the reason I got out was from this level. So I said this is the level where it was showing some buyers were stepping in. So we made the money. So we got in at here, next day gap down, we got out. Now, so we got out of the puts. Now what happened? Next day it moved up fiercely, reversed. So why is moving up like that? So what is the probability of going long, making money, and if we are wrong, we're getting out. So this is what we know, that this is the level. 117.50 is the level where we could be wrong if we get in via long. LVS was also moving on that day. So we got in via calls. And next day, look at what happened. Next day, so it went up a little further. Next 2 days, it went on a sideways. So we know that this is the resistance line, right? So if you extend this resistance line, again, it's 127.50, 128. So it gapped up. I did send alert to lock in the gains in win calls because it's hitting the resistance. So that was the logic. Lock your gains, because this is one big candle, went sideways, and another gap. Then what's the probability that it will cross? The odds are that it will face the resistance here. So the chances are it will stall here or could come down here. So better to take the money and get out. So that was the logic of exit. Now look at the CF trade. Same. CF broke this trend line. It broke the trend line and hit 25. So those who were shorting, maybe they were shorting, said, okay, the trend line has broken and we need to short CF, and we cover at 22. But I spotted here when it broke this gap. It's like breaking this resistance line and started moving furiously to the upside. So what is it? If we are going long, this is our stop, and this is somewhere here we need to sell, because this is the first resistance, and then another one is here. So next day, what happened? Next day it went up again. We got out, and then it hit. Third day it hit this level, 50-day moving average, and then it pulled back. So in swing trading, if you see this move, next day gap up and goes up, we need to get out. So we got out. This one is BG. We don't have any position in BG, but it's building up. So BG, let me put this down so we are not distracted. BG gap down and held this 66 level, but we don't know, right, whether it will come down here somewhere, here, what will happen. So it gapped down. We didn't have any position at this level. But next day, if you look at this open and what is it? Open and the low is same. And at this time when this screenshot was taken, the high and the close is same too. So this is a very bullish reversal, gapping up and then continuously moving up. And this is the price which is supposed to break and then come up and fill the gap. There is a gap here too. So the odds are that BG has bottom at 66 and it will continue going up. So look at what happened. We don't have any position in BG, but see, this is what's happening. So BG is going on a sideways move, but it's trending up. It's holding the support here. There's a support here now. Instead of 66, there's a support at 68 now, and it's holding the support. So one of these days, if we keep watching BG, we will catch the move. When it rises, when it starts making this kind of candle, we catch this move and sell somewhere here, 74, 75. So that's the goal, to keep watching BG for upside move. Next is Apple. We trade Apple quite often, and if you look at this trend line, Apple bounces off on the trend line. This is the day we got in on Apple, and next day we got out. After 2 days we got out here, but this is what we know. This is the resistance line, 152. So it broke, poke this resistance and closed above this line. So so this is another signal that is broke this line. So now look at this next candle. Next 2 days, 3 days, it is still staying above this, which was a resistance. Now it's support. So Apple, we bought it again. I think we bought again, and then we got out again. So 2 times. This is what happened. See, it held this trend line, and then it bounces up. So it went to 156. Now I'm watching Apple to come down and give us another entry, and then we go long again. Next is ADP. So ADP, we traded puts and we got out with quick profit, and this is the logic. ADP gap down. So ADP gap down, maybe it was earning or something, but it gapped down on 200 moving average. So you see IBM gap down below 200, ADP gap down on 200-day moving average. So that's the difference, above and below, right? So Then next 2 days it tried to rally here and it failed. This is the day we bought the puts. So it failed and it started coming down, but we knew the level 95.40. This is the level where we need to exit with our puts, or the buyers can come in and support. So I sent out alert saying watch 95.40 level. That's important. So next day it came close to 95.40 and it started bouncing up and send the alert, lock in the gains. And this is what happened. You see ADP on a third day came closer. The screenshot is taken below before it came close here, and then we got out. So we had a narrow margin. If it had broken 95.40, then who knows, it could come wherever it comes down to 88 level. So we got out, and then look at what happened. It started moving up. So this is another after candle. And then we know if it starts moving up, if it's holding the support at 200-day, this is the first resistance. So it can go to 98. And if it breaks this, it can come here. So it hit 98.23 today. So you see, came down, gap down to 200-day moving average, went sideways, reverse, we got in, we got out here. Then it was an easy, we should have gone with the calls because it's low risk. It was a low risk, high probability trade. If it had broken 200-day, then we would have been out and we could have gotten out here. So we could have made money, but we only bought the puts, didn't buy calls. So this is the logic. Now, if it breaks this line, the probability is high, it will go to 102. Next one is Baidu. So we also trade Baidu, and I was watching Baidu on this date. When I saw this move, I said, okay, it's holding the 50-day and 200-day moving average. I need to keep an eye on Baidu. Next day, I didn't pay much attention to Baidu. It was not that good, but this is the day we bought the calls when it was confirmed that Baidu has something to, it's going to move up. And this is what happened here. Okay, it continuously went up same day, and then went to 185, and this was the target given, 187, and it did hit. Next day it hit 187. I think it came very close. So, but we got out here, 184 level, 185. Next is Tesla. We trade Tesla a lot. It's an expensive stock, it's expensive options. Recently we got in with Tesla 244. So this is where based on this, it was moving furiously. We bought the calls, we had debit trade, we closed the short leg and then went long and so on, and we closed somewhere here. Then it did nothing, it just moved sideways. Then there was an earning. So this is a chart I sent that if it breaks 330, it will be a breakout. So, but it did not. So it failed on earning and it dropped here. So on earning, it dropped on this line. So I was watching it. I said, okay, next day, let's see what it does. Does it break or does it go up? It went up. So this is the day it went up, but it was not a confirmation for me. So I maybe had fake. So I didn't want to go long. The next day, it made a tiny candle, not much of a move. But this is the day we got in because as soon as it breaks this line, I went long. Again, the target is 330, even before 330. So this is what happened in Tesla. It kept going up, and this is where we got out, 325, 326 level. And so there was not much of potential. So if it hits and it can come down, so if it comes down, where it will come down to this level 3 times. So there was a lot of risk, and we were up nicely. So we got out with $200-300 per contract profit. And see what happened next. Tesla hit again the same line. and today it gapped down and it was bouncing up. I was watching what it will do, but it was not a good potential, you know, high risk and low potential, because this is the profit here, and it can come down to 310, 308, or who knows, it can come down to 300. So now Tesla is on radar, and we need to keep watching Tesla between 310 or 300. So 300 would be perfect, but it can bounce from 310. So if it bounces up again 310, then we can buy call, and then we have all this area from 310 to 330, 20 points. So you see the 20-point potential, whereas this has this narrow potential. And if we wrong, it comes down to 300, then we lose 20 points and we make only 24 or 5 points. So it's not a good risk reward. So all this, when the market is open, all this thing is going on fast and furious. I watch the whole market in 14 monitors. So all this thing is going on. Bullets are flying and blah blah blah. Emails are flying. People asking questions. I'm answering. I'm watching all the open positions and locking profits, sending alerts, looking for new opportunities. So all these things are happening at the same time on 14 monitors. And my neck get hurt. So this is ADI. We didn't trade ADI. Again, the same. If you look at the same pattern, went on sideways, and then boom. So why is moving up like this? There has to be some reason. It broke this resistance. So if you go long on ADI, here's your stop. It wouldn't. Chances are high that it will go up. And if it crosses 80 level, it can come somewhere here in this level, so you will get out at 84. We didn't trade ADI. This is Kite. We trade Kite. We have made good money in Kite previously, but it has stalled at 85 level. So Kite gapped down. I think it was earning. It gapped down. So I was watching, again, same phenomena. I was watching next day what it will do. So here's a big volume. It gapped down, but around 66 it started moving up, and then the news came out that CEO bought the shares of Kite. So this was not a confirmation. It's CEO buying some shares is not a confirmation that we should go long, but it was at least on my alert. So when it penetrated the middle of this candle, the chances were high that it will continue going up. So I sent the alert to end of day surveys and some general email saying that it's an aggressive trade. If you want to go long, you can go long on Kite. Otherwise, wait for this to cross this level. And some people have bought shares, 500, 600 shares at 71 level, 71.50 level, and see what happened on Kite. So next day, boom, went up, right? But it failed to cross this candle. So this is the resistance here. Next 2 days is making tiny candles. So we need some big move on the upside, like boom, push through. So when it pushed through, suppose we catch at 76, goes to 79 or 80, we get out. So it did break 76 something 50. I didn't get in. So it is trading here now. So aggressive entry came here on the day when CEO announced that he's buying shares. And if you're long, you're still long, because this is where 80 is the exit. If you have not exited here at 75, so it's trading here right now. This is NVIDIA. We had options in NVIDIA May 115 calls. And we made very good money. Some members even made 25,000, 15, 19, 7, 10, various 3,000, 1,500. So NVIDIA, we bought somewhere here. And then it went up, slide, little move up, little move up, then went sideways. Then the news came of AMD earnings, so it went down. Then it held the support. So it's still going on a sideways. Then the earning came. So earning came, blast through. Now, again, earning came I had to watch the pre-market action. So pre-market, it was moving 119 level. So 119 was the line that it needs to break 119 right at the open. Otherwise, we need to sell our calls. So it came very close to, at open it went to 119, then it came and it was struggling between 117.90 and 118, 20, 30. So because we had May 115 calls and only had 10 days or 7 days left, so we sold, but we turned around and bought June 125 calls. So this is, so selling May calls, while I was selling May calls, I was buying June calls, because I knew that, okay, if I'm wrong, I have time. But if I'm wrong on my May 115 call, then I lose my whole investment. So it was not worth holding it. In fact, when time is running out, I'm kind of feeling pressured, because I can lose the whole investment. We all know that. So when I continuously, Nvidia then went up, we got out, I think, on 125, 126 level. But it's still going through. This is still moving up. So this gap on a huge volume is pushing through. So Nvidia, we will buy on a pullback. So we have to know where the support is. This is BDX chart. We did not trade BDX, but I prepared the chart. So I saw BDX when it was moving like this. So again, 178 is the support. It bounced above 180. So I spotted somewhere at 182 level. But because of this, all this congestion, if you look at all this congestion here, due to the congestion, I did not buy calls. But if we had bought calls, our exit would have been here and this line. And this is what happened next day. Next day continuously moved up, hit the resistance. It in fact has crossed, I think, crossed the resistance now. It's trading above. So this volume and then follow through was the key. Next is TTD. I have never traded TTD, but I have added it now in my watch list. So in the Facebook, somebody came and posted TTD. I'm going to short TTD. It will fail. So I responded, why would you short something, a gap up stock like this on a huge volume, like monster, unless you're sure that it will come down? So I wouldn't dare shorting stock when it's gapping up on this volume, so huge. So this was the resistance, 51.50 level. So but it broke. Next day it went to 53. Now I think today it's trading at 54, and this chart was prepared 3 days ago. So I wouldn't short stock like this when it's making the candle. If suppose it would have made a doji here, or some shooting star, or some bearish candle on a lame move, then yeah, you can buy puts and keep your stop above. But when you see a candle like this huge, and this candle boom 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 bullish, why would you buy puts? Why not look for a pullback and then buy calls? It doesn't make sense to buy puts on it. LVS chart is the same day when we traded WIN. The LVS was also moving, but then I said, no, this is too much resistance. Unless it breaks through this, it was not a good trade. So I ignored LVS. So this is the reason I ignored. This is YY. So we have YY call. We were in profit today. We did not sell. So I'm holding it for another 2-3 days. So this is the logic again. See, YY gap down, but it reversed on this support. So when it's reversing, why is reversing? If the chances are high, it will continue going up, and the stop could be here. So we bought calls on this day. And then next day, YY, for some reason it pulled back. But if you look at this pullback, it's still long. It has not violated the open here. It didn't come down here. It just made a low, which is higher than this low, and that's it. It's still long, and this is the resistance, and this is another resistance. So third day, It just made a tiny candle here, but today it was moving up and almost tried to cross this level. So once it breaks this 56 level, which is resistance, you see here, this is all resistance, this is resistance. Once it breaks through, it will move furiously because all the sellers are exhausted. So people, those who are holding it to sell here, they are selling. And then no more sellers, it will move up. So we are waiting for sellers to go away, and this is the reason. This is FedEx. So we hold calls FedEx. I sent alert previously, then I sent alert on this here to buy July 200 call strike, and today it moved and it hit the resistance. So the chances are high now if it breaks this resistance level, right? And then here, so between 195 196, it's gonna go up here, the 200 previous high. So that's the target I gave, 200. So if it breaks, it will come here. This is where we exit. So this is the level we got in, and then it penetrated this 50-day moving average. So right now it's sitting here. Today is the day we prepared this chart. So watch FedEx to break through towards 200. This is the UNP. We have UNP calls, and the logic is same. It came down here, hit the support. This is the day we bought the calls. So if it hits support and it's bouncing up, and then next day it's also bouncing up, what's the probability that it will continue going towards 114? Chances are high. Chances are low that it will break. If it breaks 107, we'll be out. But now we are in UNP, and today this is another bullish candle UNP form. So I'm waiting for 114. As soon as it comes closer, I jump the train before it even comes here. So don't even wait for this unless you're watching 1 minute, 2 minute chart and it's flying through this. Chances are it will stall here. So you get out, you get in here at around 110, get out at 114. That's good enough. This is Costco. Costco, I think, announced a special dividend and it fell. But so any stock which has fallen down, we need to watch to see the reversal. And this is the reversal which was taking place today. So I'm watching Costco to break through this level, 172 level. If it breaks through 172, suppose tomorrow, we'll get in. Because this is a bullish candle at support. And the next day, if it forms another bullish candle, chances are high it will come here. So we'll 172, 176, 177, we get out at 4 or 5 points. Stop is here. Another one, Pepsi. We own Pepsi calls, right? So this is solid bullish candle again at support. So you see, we bought the Pepsi calls here, and then it went on a sideways move. But so it went on a sideways move, but it's holding support, right? So if you are long here, there's no exit. It's the sideways move, accumulate on the touches. This is what when I started, one day I'll explain how I started trading and what I was taught. This is what I was taught. Look for the touch of the support lines or moving averages. The more time the stock is hitting the touches and support, the chances are high. So I accumulated Pepsi calls on the sideways move, and then today I also loaded up and I sent the alert to buy June 115 calls at like 75, 77, 8 cents. So what is the probability the Pepsi will come down? It's low. Chances are high it will go up, and there is no resistance. Resistance is here around 115, 116. So if you bought June 115 call for 75 cents, sell at 116 is double. So this is another logic. Now look at the CarMax. Same. So this is called caveman trading. You see, it bounced above the resistance. It closed above and then it bounced. Solid candle, bullish candle. So we could have gone long today. I did not. So I'll see Well, now I know. So we know now, right, that KMX has formed this. If it comes down and hold this support level near 60, we should get in on the move up. And if it starts moving up furiously with high volume, then you get in, and here is your exit, 66. So this is the logic I use during trading. There's more to it than just simply this. I try to make it simple. So everything, during the market, this bullets are flying, and I'm watching and trying to make the decision, saying what is the probability that the trade will go in our favor and where we can lose. So in Carmex, we can lose if it goes below 58, but it can continuously, it can go to 66, and this is the candle which is telling us that Carmex wants to go up. I think this is the last chart. No, there's more. There's more now. Wait, there's more. So last one is MasterCard. So MasterCard, we had MasterCard on our radar. I wanted to send alert yesterday. I did not send because I thought, okay, maybe this will fail, and who knows if it comes down to 115. If it comes down, then I would buy. So I did not send alert, and then today it was moving. So now I need to break this resistance, and here is another big resistance. So you see, gap up, form this bearish candle. So 120 is the key. If it breaks 120 level, MasterCard will go up. Then, and another one I think I did not prepare is Goldman Sachs. No, Morgan Stanley. Again, same process. Morgan Stanley holding the support, trying to break the resistance. If it breaks the resistance, then we get in. And tomorrow I'll send the chart for Goldman Sachs. It also looks like it's reversing to the upside. And if it breaks 226, 60, 70, 226, 60, 70, I'll get in the calls. So tomorrow is the day for Goldman Sachs to show the entry to the upside. So this is it. We went 40 minutes. If you have any questions, you can send me, noshi@financialmarketwizard.com. Otherwise, we'll see you in the next webinar. I have scheduled the next webinar for May 28th, which is Sunday, 5 p.m. If I hold any webinar before, I will send you email. Otherwise, we will talk again on Sunday, May 28th. And you can send me questions here if I haven't answered or if you have any questions. Thank you. Bye.